Chelverton Small Companies Dividend Trust was established in 1999 to invest in small companies in order to provide a high and growing dividend. During the course of the last 18 years, we have grown the dividend, and as we pay dividends on a quarterly basis, this has proven to be a very attractive source of income, particularly in the last few years, for direct investment by individuals. Setting us apart from all other investment trusts, our average weighted market cap of the companies we invest in is only 330 million. We're very pleased to point out at this time that we are the #1 equity investment trust over 1, 3 and 5 years. We have the highest level of retained revenue reserves against annual dividend, which can give an investor comfort for the future that in the event of a small market decline, we can continue with our program of increasing the dividend on an annual basis. The most important thing about this fund is the dividend it pays, and that's what we focus on in almost a slightly obsessional way. We pay quarterly dividends, and our intention, and we've been doing this for the last 5 years, is to increase the first 3 interim dividends to equal the final dividend, so gradually equalizing them over time. We have models going out to 2026 of what the dividend will be across that piece. And we're retaining every year as much dividend as we can, which is 14.9%, and any excess above that we pay as a special dividend. So in order for a company to be considered for this fund, it has to yield at least 4% on a 12-month perspective view. We only invest in the ordinary shares of AIM and listed companies. At the moment, the portfolio is roughly 40% invested in AIM companies, 40% invested in small cap, and 20% in mid cap. Those percentages are a derivative of bottom-up process. We also invest at the moment in 26 sectors. Again, that is a derivative of the investment process. However, we do have a top-down control in that we won't have more than 20% in any single sector. Further controls we have are that once a company becomes more than 5% in capital terms, then we have to start reducing it, i.e. we will not let a company become too dominant part of the portfolio. Similarly, and equally important, because this is an income fund, if more than 5% of the income of the fund comes from any single company, we will reduce that as well. We don't want to, and we don't need to, take stock-specific risk. So we have a minimum portfolio size of 65 holdings, and we could go up to 80, 85 holdings. And we treat dividend-paying companies as a proxy for value. And therefore, by spreading our portfolio across, in this case at the moment, 72 companies, we are reducing any risk from a particular stock. There's been a lot of discussion that the market is overvalued. You can appreciate from the type of companies we invest in, so these are small and mid-cap companies with a yield, a high yield. They are a certain subsector of the market, and we feel that they are fairly valued and certainly not overvalued. At the time of the referendum last year, there was a knee-jerk reaction in the value of the market in terms of the value of our shares, and our shares dropped significantly in the first week. Over the next 6 weeks, they then recovered back to where they were, and indeed have moved on significantly from that point. We've analysed the impact of Brexit, or indeed where our companies sell their products and services, and some 73% of their sales are in the UK, and that is not surprising for a small UK fund. Many of our companies, 100% of their sales and their services are in the UK. Of the other ones, 13% is into the EU, and we've gone through each of those companies, and they are embedded within the countries in the European Union where they operate. 9% goes to America and 5% to the rest of the world. Anecdotally, those two areas have been increasing, and that would be because of the decline in sterling and the fact that their products and services are now cheaper to those other countries. So we believe Chelverton Small Companies Dividend Trust is an attractive proposition because of the asset diversification, the yield pickup, the quarterly dividend, the retained revenue reserves, and the prospect of further growth from small companies. Most analysts consider that the UK will continue to grow over the next few years, and given the emphasis in the fund on UK companies, we feel confident that our companies will reflect that in the coming years.